Fund Supermart, your online gateway to unit trusts.
Hi Sze Sze, what is the outlook for Asian equities for the next couple of months?
I think for the next few months, it looks like the world generally, there are a lot of uncertainties. Clearly, there are a lot of political events that are going on. We've seen some earlier this year. Obviously, in the middle of the year, we had Brexit. We're currently going through the US elections. Going into next year, there are also some key elections in Europe, China as well. There's some key political events. So I think the broader sort of macro picture for both the world, but as well as the region, I think there are a couple of uncertainties that are sort of in the horizon. So I think one thing we can probably expect is volatility. But I think at the same time, whilst that's the case, I think if you sort of take a longer term view, I think when you look at Asia, there are some structural positives in Asia. There are economies that are rebalancing in Asia, and China is one of them. Obviously, the new economy bit is looking very interesting, very exciting. So there are always opportunities to be found. India as well, has overtaken China in terms of growth. Again, from a bottom-up perspective, and as stock pickers ourselves, we find, we're actually finding opportunities there as well. So I think, with the volatility, I think the key thing is, looking for opportunities at the right entry points, and we want to stay sort of disciplined in terms of valuations. Kind of cloudy, perhaps a bit cloudy in the nearer term, but we want to sort of stay focused on the longer term and sort of because there are some structural things that are playing through as well. I mean, disruption is one of them. So those are thematics that we think are much more important, because then it means can you actually find competitive businesses that look out further, and whether it's 3-5 years down the road, are these companies going to be winners over those periods?
What type of companies and sectors do you favour more?
I think in terms of sectors, because we are basically bottom up, so we're stock pickers. So when we look down in terms of themes, then I think there are certain sectors which may stand out more in the longer term. So for example, when you talk about disruption, technology becomes the center of that thematic. But within technology, there are so many areas as well. So for example, e-commerce, gaming, I think those are rather interesting sectors, but at the same time can be quite expensive as well. But we're seeing strong growth, and I think one of the key things is you're actually seeing consumer behavior change, whether they're spending more time or conducting more purchasing activity on smartphones. So with those kind of thematics, we're fairly positive on the tech sector. But also to remain competitive in that sector is quite challenging. So then, when it comes to the company level, that's where, the team is doing a lot of work in terms of, looking for the companies that continue to innovate to stay ahead of the curve. So our focus is both on, companies that structurally look attractive to us, where we think they have some competitive advantage. They're able to continue to innovate and stay ahead of the curve. But also companies that are well managed, have strong balance sheets, because in times of uncertainty, when we talk about sort of all these potential macro headwinds, if in a sell-off situation, then we believe that markets should then look to fundamentals to provide some support. So generally, for the businesses that we invest in, we want to look for that quality buyer. So we stay quite very focused actually to our valuation discipline.
Both the Schroders Asian Growth Fund and Asian Equity Yield Fund taps into the Asian equity space. What are the key features of the two funds?
Right. So, in terms of both of these funds, they both invest into Asia. For the Asian Equity Yield Fund, there's an added exposure to Australia. But I would say the key difference is obviously the yield fund, as the name implies, has a focus on yield. And I'll emphasize yield and not just income. So when you say yield, typically companies that are able to pay a dividend are of a better quality because they need to then pay that dividend out of cash. That also implies a certain level of corporate governance and therefore a well-managed capital structure. So in that sense, the yield fund has a bit more of a quality bias, and what you'll see that fund do is that in times of market volatility, it tends to do better. So it's more risk-adjusted exposure in those times. Whereas for the Asian Growth Fund, it's quite unconstrained in its construction, in the portfolio construction. So it's kind of our best ideas within Asia. It doesn't have Australia in it, so it's Asia ex Japan. In a way, that fund is managed much more sort of relative to the benchmark, in the sense that, our aim is really to be the top player within that space, whereas the yield fund, it does pay investors, as an income, but at the same time, so it gives you good exposure to Asia, but in a risk-managed way. So in the longer term, that's a good exposure as a core holding in the fund, because it gives you that stability and that defensiveness. And then the growth fund gives you that added sort of kicker in performance, if you like.
What do you think are the factors that have contributed to the growth of these funds?
I think for the Asian Growth Fund, if you look at sort of the last 12 to 18 months, China has been a big contributor. So the technology space actually has done very well across the region. So, in China, we have more exposure to the e-commerce, internet, so more on the software, the soft side of things, where that's supported basically by consumer behavior. So the Chinese are just spending more time gaming, purchasing online. So that's driving very strong growth. So we're quite well positioned in that space. Within Taiwan, that's where we get nice exposure to the hardware side of things. And again, there's some really strong leaders within that space. Obviously, that's also evolving, but those have been strong contributors. But within China as well, we do like the private sector, more. So outside of technology, actually, there's some names that have also done very well within China, whether they're export related. But actually, what you see is that China's kind of moving up the value curve. So that's done well. And I think for the yield fund, basically the focus on quality and the refocus on fundamentals has helped, because I think the earlier part of this year, the year started off quite difficult. So that's when that focus on quality comes back, because investors and the market becomes a bit more aware of what the potential pitfalls are, and therefore coming back to fundamentals, coming back to quality.
What types of investors are best suited for these funds, and what are the key risks to look out for when investing into them?
I think investors who buy into Asia, clearly Asian equities is a volatile asset class, but at the same time, it's a region that has a lot of potential. You've got developed markets in Asia like Hong Kong, Singapore, but at the same time, some of the biggest economies in the world are also found here in Asia. You've got China and India. Clearly, these economies are undergoing transitions and rebalancing, and things are changing. But at the same time, there are a lot of trends that are playing through that will provide a lot of opportunities. When I talk about China, for example, they're moving up the value curve, so there's a lot of innovation that's going on as well. And when you look at disruptive forces that are quite global in nature, Asia is not really sort of taking a back seat. I think some parts of Asia are actually very involved in that innovation. And therefore, as an asset class, we think there's a lot of opportunities to be found. I think, the question is more, do you have that valuation discipline? And therefore, are you buying these companies at the right prices, but also following them closely to make sure that, you're buying the ones that are able to stay ahead of the curve? So whilst there are, obviously there are a lot of macro noises coming across, not just in the region, but globally. But I think for anyone who wants to buy Asia, we believe that you should have a long enough investment horizon to be able to benefit from the trends that are playing through here. Asian companies can be both domestic in terms of their business exposure, but they can also be quite export driven as well. So again, looking for the winners in those areas. We don't particularly want to, or we're not particularly positive on any, just focusing on one, but we think a diversified exposure to Asia is a good way to play the region. So for these two funds, in a way, to get that longer term exposure to Asia, as I mentioned earlier, the yield fund, it in itself, because of the quality bias, provides sort of like a core exposure where, basically you receive an income as you hold the asset class. And then on top of that, depending on where markets are in the cycle, you can then use the growth fund to adjust your exposure if you're a bit more positive, if valuations are looking a bit more attractive, good entry point, then you can actually use that fund to add to your exposure to Asia and hopefully participate in the longer term growth of Asia.
Thank you.